Hi guys, this is Pietro from tradingkitchen.com. Today I want to show you a very interesting short opportunity on NZD So, as usual, let's start with the multi-time frame analysis. On a monthly point of view, we can see now that price last month made this kind of timber, okay, that usually means the price will change the trend to go down, okay, like this, but it will be too easy to grant it as a signal. But so we have to wait we have to look for another confirmation that is could be this one, for example. As you can see, here we are on a very important structure area, a very important resistance area, from which price reacted once, twice, here, three times, and now maybe this is the fourth. On a weekly time frame, everything is confirmed, okay. Here maybe there is just a little bit clearer structure area. Let me show you with this inside bar. But anyway, price reacted here and confirmed another pin bar, okay, that is already it is just broken, okay, here, and this could be another important confirmation of a bearish environment, okay. So let's move down on a daily time frame. What we can see, let me first remove this one. We can see that now price broke. Price already broke this support, now turned resistance, okay. But price are now in another support zone, okay, which is this one, generated from this candlestick pattern, as you can see, okay. And here we have another support, okay. So what we can do, we can wait for the price to broke the structure, retest it, and then here we can go short. By the way, this is 0.70 level, price level, which obviously is a very important level to consider. If you don't want to wait for the price to do this thing, let me show you first which kind of stop loss and TP we can take it. So first of all, the TP will be more or less this one. Why? Because here we have a very good impulse, okay, but we don't have to wait the price for the price to reach this kind of level, but we just set our TP some candles above this, look, this kind of candlestick pattern like doji, something like that. I really don't remember all the patterns, but this one, it will be a very good signal, okay, and this will be our TP. The stop loss just few pips above this structure area, which is also 1.91 risk reward ratio. That it will be just a little bit far from our usual 1 to risk reward ratio. But anyway, we can consider this TP, okay, which is perfect also this area, yeah, more or less, okay. If you don't want to wait for the price to broke this structure, we have to find another entry, another opportunity. So we have to move on a lower time frame, and as you can see, here we have another very good structure. Okay, so this one. So what we can do, we can wait for the price to retest the structure, and we can go short here. Why I can say this, because as you can see, the last impulse, so this one, retested, okay, retested, it has to retest, okay, yet, but if you go short here, okay, as you can see on the 4-hour time frame, means that price for sure retested the 382 of Fibonacci, which is my base rule. Okay, so let's first, oh, if you see now, just almost retested here now. But anyway, let's wait for the price to go up, retest the structure, which is also the 61.8, so a very, very, very good level to trade. Retest this structure, and here we can go short. What about stop loss and take profit? So here is the entry. The stop loss just a few pips above the higher high, which is this one. You can use also this, but as you can see, this correction, or better, this correction, this ended here, okay, so it will be just a little bit less risk, okay, if you set here your stop loss. What about take profit? Take profit will be 1, 2, okay, 1, 2 risk reward, which also is the 0.27 of Fibonacci taken from the last impulse, so this one, okay, and this will be very, very, very good as a trade. Obviously this is just a little bit risky because price doesn't broke this structure yet, but anyway, it will be a very good trade as well. Obviously, there are rules that must be confirmed. If you follow my strategy, you will be able to identify the right filters and the triggers to enter correctly the market, and above all, avoid fake signals. Okay, and so I really hope you like this video. Let me know what you think about this analysis with the comment section below, and give me your point of view. Okay. Thank you very much. See you next.